All right, it's time for Saving Spotlights, where we usually talk to one of the journos within our team about a recent article they've published. And today we're talking to Brooke Cooper, the editor of Your Mortgage, who just last month published a piece that revealed Australian property sellers are pocketing over $300,000 in profit. And that's a figure that's set to rise as interest rate cuts fuel home values. G'day, Brooke. Good to have you on the podcast.
Hey, Dom. Hey, Harrison. Thanks for having me on again.
Thanks for joining us, Brooke. Before we kick off into this rather, prickly topic for some, do you have a savings tip for us?
Oh, okay. I didn't come prepared, but I do have a savings tip.
Nice.
I'm currently booking an overseas holiday. I've probably mentioned it on the show. It's where all my money is going lately. So my tip is to compare. I mean, I edit a mortgage comparison website, so that's probably not surprising, but compare across your different holiday booking platforms, really. So booking.com.au is a great one, or booking.com, I think it is a great place to start. But also, you can go directly to a hotel's website, and there are other platforms as well. I know I was booking a hotel for London recently, and I needed to be near the airport. So, of course, you're looking at that airport tax. Ultimately, you're going to spend more being close to Heathrow. But I looked on booking.com, found the one I liked, and then I went direct to the website. It was about $20 cheaper on the website, but I'm trying to collect my Qantas points at the moment. So I jumped over to the Qantas booking platform and it was $50 cheaper there. So
Wow.
just cross check across different platforms and you
Mm.
might find yourself a bargain.
Yeah, I mean, I must admit, it's quite painful sort of bouncing between all these different websites. And you just want to just get it done and book the thing, get it over with. But when you're talking about that sort of amount of saving, it sounds like it is worth the admin. Okay, so this story that you published a couple of weeks back, uh, Australian property sellers making profits of 300,000. That's the median, and that was just in the December quarter. I mean, there's no secret really why that's on the rise. It's property prices bouncing back up, right?
Ultimately, yeah, the huge jump, well, not huge jump, but record median profits in home sales is largely driven by house prices going up. So I know you guys have spoken about the latest HVI data out from CoreLogic. House prices hit a record high in March. But even just looking back over the last 5 years in Queensland, South Australia, and WA, median dwelling values have risen around 70% in both like the capital cities of those states and the statewide regional markets over the last 5 years. So it's no wonder that we've got record profits going on when people are selling their homes. But there's also something to be said about the fixed rate cliff. So house prices in like the likes of Melbourne, Hobart, and Canberra, they haven't quite reached those 2022 record levels that they saw in those areas. And that's when interest rates were really, really low. They were record lows at that point in time. So people who locked in at record low rates, often like sub 2% home loan interest rates for 2 or 3 years at that kind of 2020 to 2022 mark in time, they've rolled off their fixed rate cliffs now. Hopefully you're not just on the precipice of it. I'm sorry if you are. You might be in for some pain soon. Um, but those people aren't necessarily struggling now and facing a reality where they have to sell their home. That pain has passed us. So that's a lot to do with why we're seeing now record median profits among home sellers.
Yeah, and that ties nicely into what we were talking about in the news segment with the proposed policies by the would-be coalition government around tweaking that APRA serviceability buffer might make refinancing a bit easier for those people and for first home buyers entering the market. What about losses, Brooke? Because history is written by the winners. You only hear about some old granny who's sitting on a gold mine of a property she's bought for $3 in 1952 and sells it for a record profit. 50 years later. But yeah, there's no doubt going to be some people, some unlucky souls, making a loss on their property. So what's the go with that?
Yeah, absolutely. So the median loss on a property resale in the December quarter was around 45,000. That was up by about 5 grand quarter on quarter. It also the number of people selling for a loss increased slightly to around a little bit over 5% of resales, which considering property prices have soared in recent years, that might be a little bit of a surprising figure as well. 1 in 20 are still selling for a loss. Um, a lot of that, so partly part of that was to do with the slight dip in home values that we saw in the December quarter. Just that price growth just slowed a little bit, and we saw a dip in home values. Um, there was also those who are making a loss on their resale. Around a third are selling after a short period of time owning the property, so between 2 and 4 years. So that's a lesson. If you property is a long term investment, typically, if you're jumping in and jumping out of the market really quickly, you're at a higher risk of realizing a loss. And another part of it is the unit market. So, around half of properties that sold for less than they were purchased for were units in the December quarter, and there were units in Melbourne and Sydney. So, I dug into the data there. House prices in Sydney, say, over the last 5 years have risen 37%. Unit prices have only risen 9%. Um, in Melbourne, house prices are up 13% over the last 5 years. Units are up about 1%.
Wow.
So yeah, both cities saw an apartment boom kind of in those late teen years, and it's a lot to do with that as well.
Mm.
There's just a
Yeah,
greater
there's that.
supply of units in the market.
Yeah, the real clear divergence between the performance of houses and apartments. And there was some talk that maybe apartments would start outpacing houses, with interest rates being higher and affordability constraints. But it doesn't seem like we're really seeing that just yet. I mean, I've seen
Mm.
some apartments have risen quite a bit. Like my younger sister, looks like her apartment is going pretty gangbusters at the moment. Judging by, there was a sale of another apartment a few floors above her for far more than what she paid for hers just a year ago. So, but I think overall across the board is generally houses.
There's also housing costs too, right? Like,
Oh yeah.
you got to factor in stamp duty, and then if you're in a unit, to see unit prices only up 1% in Melbourne, it's pretty telling because you got to factor in body corporate, which on these new apartments with a pool and lift and whatever, you can easily see that at 10 grand. So all those holding costs too. Realistically, maybe those losses are slightly greater than just that advertised value. So, yeah.
Yeah, I guess you need to take into account net profit when it comes to these things because owning a house costs money. In the home insurance, your council rates, stamp duty, all that stuff, even just maintenance.
Mm.
But yeah, going forward, Brooke, like surely those profits are only going to increase. Like, what's next for resale values?
Yeah, so resale values are obviously tied really closely to property values, and property values are currently tied to interest rates largely. So we saw in the March data for home prices, interest rate cuts improved buyer sentiment, improved house prices. So that's probably going to be a key driver for profitability going forward. Um, Other than that, there are lots of factors that could kind of shape the housing market in 2025. So we've got population growth is starting to come off the boil a little bit, and that could help kind of keep a bit of a weight on house prices. So could like housing credit policies, like the serviceability buffer you mentioned before, that could act as a headwind. And affordability, just in general, people aren't going to pay more than hopefully people aren't going to pay more than they can afford. There's going to be a limit to how much someone can pay for a house, and when you reach that ceiling, house price growth will obviously slow. But there are other factors like cost of living relief. We saw another energy rebate in the budget, some more tax cuts. The jobs market is still really strong. People still have that strong income coming in typically, to be able to afford these repayments. And then, yeah, if we see more rate cuts, that could drive house prices up higher as well. So that's largely what we might expect to see drive profitability. But yeah, it'll be interesting. We'll keep an eye on that.
Yeah, it is funny, Brooke. People generally aren't called out for saying, like 3 6 months ago, it was like the narrative was that unit prices are converging on houses, and then it's house prices are flat, and then all of a sudden one rate cut under our belts, and there's a new dawn in house price growth, and the narrative quickly changes. But the truth on the ground may be a little bit different at auction day and with private treaties. So Always appreciate your insights, Brooke. That's Brooke Cooper from Your Mortgage. Thanks so much for joining us.
Thanks for having me. It's been great to be here.
Thanks, Brooke. Cheers.